Hi, everyone. This is Jeff Clark of thegoldadvisor.com here with another episode of the Pater podcast, where we interview CEOs of companies that we recommend, but that we personally own and track and follow and report on. That's what you can get from thegoldadvisor.com. So today I'm with Hugh Agro, the CEO of Revival Gold, one of my very favorite CEOs in the industry. Hugh, I've never said that before, but I really do have a lot of respect for you, so thanks for joining me on this video.
Oh, thanks for having me, Jeff. It's great to be part of your podcast.
Great. Now, one thing we do on these videos with our companies is we ask them for a story. So we're going to start with that with you. And you have kind of an interesting one, a little bit different twist on something. Share with us what you're thinking there.
Well, listen, I think in the gold space and the gold equity space in particular, it's all about timing. I was in Nepal on a trek in my 20s, descending from Annapurna Base Camp in the
Oh,
spring when the snow's starting to warm. And we left early to avoid that warming, the warming rays of the sun on the snow, to wanting to avoid avalanches. At one moment, there was a crack in the hills behind us, though, and then the air
oh,
filled with snow. I
oh,
looked at the guy who was standing behind me. We held each other, looked in each other's eyes, and thought to ourselves, this could be it. But in
oh.
time, the uh, the commotion, the noise of it all died off, and we were able to dig ourselves out of the tail end of an avalanche. And
Wow.
about Jeff, about a day later, day and a half later, we were down in the village below. Everything was beautiful. The rhododendron trees were blossoming. It was sunny, but the chatter was all about the group behind us, who was just a little bit late getting up that morning, leaving the base camp, and it got wiped out by the same avalanche, and people
Oh,
perished. And I tell
oh.
that story because I think to myself, how lucky I am still to be here, and how timing
Yeah.
has played such a role in my own life, and I know it plays a role in how we, as investors in the gold space, live and breathe here, because a lot of it is beyond our control. We focus on the things that are in our control, but
Hmm.
sometimes we get lucky, and sometimes we have to struggle through some tough slotting. And that's always been a reminder for me about the importance of timing.
Oh yeah, wow, what a scary story, but thank you for sharing that. And yeah, I think we have struggled through with at least many junior stocks have, but I sure like our timing right now. I think by this fall that we're going to be a lot happier. But we'll talk about that in a minute. Hugh, for those who don't know you, tell us how you got involved in the mining sector. And for those of you who don't know, Hugh's a former Kinross executive. So this guy's been around and he knows what he's doing. But Hugh, share with us how you got involved and your success here as a mining person.
Yeah, well, thank you for saying that. I'm obviously an adventurer. I like travel, and I love the complexity of our business. It's tiresome at times. It's challenging, but it's also really an interesting business. If you think about it, there's very few other industries that touch everything from communities to government, to the engineering side, the social side, the natural side, the environmental side, the strategic side, and the business side. So for me, it was
Mm.
just really a compelling place to get into. And you mentioned Kinross Gold. And I joined Kinross Gold in 2005. The company wasn't able to report its financials with the exchange. Market cap was about $1.7 billion dollars. Wasn't an operator, didn't have any growth. And as part of that
Um,
team at Kinross, over the next 5 or so years, we took the market cap up to 17 billion, so a 10 times increase in market cap. We brought in some
wow.
terrific assets, became an operator, and really it was an amazing journey with that team and with that company. I retired, and took my marbles off the table, And you might remember that I'm a cyclist as well as a hiker and an adventurer. And I got into cycling for a few years, but I came back to the business to create Revival Gold because I really saw an amazing opportunity with this decline in the pace of global production, global
Uh,
discovery relative to the pace of global production. And
yeah.
anybody who's heard me speak before knows that I'm not a great prognosticator on the price of gold. But what I can tell you is there's not enough good gold projects in good locations to satisfy the demand for majors. And I've been at the
Uh,
table at those majors when the scramble starts and people are looking to fill their pipelines for future production. And that's why I came back into the business in 2017 to create Revival Gold. Now, 6 million ounces of gold, two gold projects, both in the Western United States, marching towards production decisions.
we're going to talk about the projects, but Hugh, you brought something up. I think we're really on the cusp of maybe another M&A cycle because the producers, they are generating, I mean, they're cash machines right now. Costs are down too for them, so their margin is very high, 50% on average. And they've also reduced debt over the years. That was a big complaint, 10, 15 years ago of the majors and producers is they took on too much debt. They've cleaned that up. So they have strong balance sheets with lots of cash flow. Do you think that we're on the cusp of maybe a jump in M&A?
Look, investors want to see that cash delivered back from the majors, the producers, the intermediate producers. That $3.5 to $5 billion a quarter of cash being generated by the larger companies in our space. And I don't think there's going to be an immediate move to reckless M&A as we saw in the last cycle.
Yeah, right.
But rest assured, at 50% margins, some of the best margins in any business segment in the S&P, actually the best,
Yes.
ahead of software companies, ahead of financial services companies, ahead of utilities. Those margins, I think, are going to drive investor attention back to the space, and ultimately, we're going to see the move to replace resources because, as we all know, in the mining industry, we're digging ourselves into a hole every day with our
Literally.
literally, and so those projects need to be replaced, and the margins they're generating today warrant the investment that will replace those pipelines. There's another phenomena going on, which I think is an overlay and a more important phenomena, which is the move to passive investing. And so generalist funds are chasing momentum. And as we see the Mag 7 and some of these sectors that over the last decade and a half have seen nothing but inflows of money turn, investors are going to be looking for value elsewhere. And it's a dramatic change over the last couple of decades in the way money is being invested, but it's chasing momentum and it's chasing market cap. And I think
Mm.
it's beautiful on the way up, but it's going to be really painful for those investors following that trend on the way down, and those
Well,
sectors that go out of favor.
yeah, the on the way down, that's probably a few years away yet. We haven't even really started yet. Other than the gold price, nothing's really moved all that much, on our sector. So I think when momentum starts, it's gonna be fun, and I think it'll last more than a couple months or whatever. So,
Jeff, sorry, I'm
hey,
referring to everything but the value space, everything but the gold
ah,
space. I'm referring to the Magnificent Seven. I'm referring to the
yeah,
Nasdaq. I'm referring to the S&P 500, which has really been moving on the back of this growth, this massive growth in passive funds. Now, some 13 to 14 trillion dollars of money invested passively, matching the
wow,
amount of money that's invested in managed funds. And that's a big change. For example, in the mining industry today, we've got some $400 billion invested, of which only about 10% of that is actively managed. The rest of it is passive. And so what that
Wow.
causes is, of course, it causes investors, particularly generalist investors, to chase momentum and market cap. And I think the thing that's going to happen here is we're going to see a shift, and we're going to see value come back into vogue, and that's going to be good for
Mm.
the junior space. It's going to be good for the undervalued gold space, and it's going to be good for Revival Gold's investors. In the meantime, we look after the things we can control, which is, of course, driving value in our projects, managing to minimize equity dilution, and setting ourselves up for the re-rate to come.
Yes, that's great. And I believe that's going to happen for Revival Gold. And given where the stock is at, that could be a lot of fun. But real quick, let's jump to the two projects. And I'll actually start with Mercur because that's the one that's really at the forefront for Revival Gold now, this acquisition you made a couple years ago. Um, so tell us where that's at and what's coming next with Mercur.
PFS due any day now. We're targeting for the end of this month, so it'll come any day now. And we are really excited about what this means for Revival Gold. We're targeting between 80 to 100,000 ounces a year of gold production from this project. We think we'll have 9 to 10 years of mine life. And watch that permitting timeline on this project because, of course, it's on private patented claims, and that
Yeah.
makes for quicker permitting timelines. So this is an exciting time. Watch this space.
Yes, and Mercur is probably what, 2 years away from production, maybe. It's not too far.
We're guiding to something less than 3 years on the permitting here,
Okay.
but watch this space. I think this could be really exciting, and there's some moves afoot, of course, in the United States around strategic metals, including gold, and domestic production of those metals, which are all good for the sector generally, and for Revival Gold specifically.
And real quick, Mercur has a lot of exploration potential still too. So is drilling on the table for Mercur in 2025?
We've got one of the only Carlin type deposits that isn't controlled or owned by a major. It's a fantastic
Wow.
deposit system. These are the deposits that are generating the high grade discoveries that you're seeing, like Cortez Hills and 4 Mile in Nevada. And we happen to have one of the only ones, as I say, not controlled or managed by a major.
That's great. And then, real quick, Beartrack-Arnett, which was the flagship, and maybe it still is, but that's a big project. Tell
Yeah,
us where we're at
that's
with.
our founding asset, Jeff. You're right, and it's
Yeah,
4.6 million ounces of gold in an orogenic gold system. We're going to continue to explore there. We've got an open 4 or 5 kilometers of strike beyond the existing mineralized trend there that is itching to get drilled. And in the meantime, we're advancing permitting preparations there. So very much part of our portfolio. Very exciting for our shareholders in terms of the option value related to that large gold deposit and the exploration potential beyond.
yes, two strong deposits with a total of how many million ounces so far for between both?
We're just over 6 million ounces. So
Wow.
yeah,
Yeah,
these are some of the largest new gold discoveries in the United States in the last decade, all under the banner of Revival Gold. Our US based team, John Meyer, our VP Engineering Development, Dan Pace, our Chief Geologist. These people are outstanding professionals, and we've
yeah.
got a really solid team behind them.
Absolutely, a very strong team company wide, and again, exploration potential at both deposits. So the future is very bright for Revival, in my opinion. But Hugh, as we wrap up, what is going to get these stocks to move in the junior sector specifically now? Some have moved, but many, like Revival, have kind of been trading in a range and are obviously deeply undervalued. Do you have a sense for what you think is going to start to move the junior sector?
Yeah, I think it's already started. And we are seeing a
Yeah.
lot of corporate interest in what we're doing. It doesn't show
Uh,
up necessarily in the retail trade, but these stories are always a one of those long overnight successes. In other words, you put the
yeah.
work in, and then it doesn't take much for the value to all of a sudden escalate. And from the attention we're seeing from corporates, from strategic financial investors in our business, the recent development of our bringing in Dundee Corporation as a strategic investor is an example.
Yes.
They recognize the value of our team, the value of our assets, the uniqueness of our position, one of the safest jurisdictions in the world, with the support that comes from being on brownfield sites with existing infrastructure, low
Right.
capex, low risk, and in a gold price environment that just sees no end here at over $3,000 an ounce. Timing is everything. I started on the outset,
Yeah.
Jeff, talking about timing and how it can be deathly chilling, but also hugely rewarding. And this is one of those times when I think investors need to position, need to own value, and in particular the junior gold space. And I put my hat on to say Revival Gold is one of the best plays in the space at this time, Jeff. So
I
invite
certainly
your
agree.
share, invite your audience to learn more at our website, www.revival-gold.com.
Yes, and I certainly agree, Hugh. I'm overweight the stock for those who don't know. I full disclosure, but Hugh, you're making me want to buy a little bit more here. So,
Good
um,
times.
well,
Good times.
Hugh, thank you for joining me very much. Any last words? Any last parting comment you want the audience to know about Revival?
Just a big thank you. You play an important role here in the space of educating and informing, and we're real happy to be working with you, Jeff.
Yeah, thank you. And I think to shareholders, if you own the stock, I think Hugh's saying thank you for your patience too, because I do think we're going to see reward here, probably starting sometime very soon. But just imagine where a company with the position it's in right now, where that stock could be, 1, 2, 3 years from now. So. Well, everyone, thanks for watching very much. Hugh, thanks for joining me. And we'll see you next on the next episode of Pay Dirt Podcast.
Thanks, Jeff.